Okay, and the session should last until 11, until 12:30, sorry, and we'll dedicate the final 20 minutes of the session for Q&A sessions. Okay, so I will start by introducing our speakers for today. We have some amazing people who are really knowledgeable and have a lot of experience with the pension sector. We first have Mr. Kofi Polly, who is the CEO of People's Pension Trust and a GNBCC member. They have been GNBCC members for over 20 years and have been very instrumental to the success and the growth of the chamber. Mr. Polly, you're welcome. I would give you the floor shortly so that you can introduce yourself. You'll do a much better justice to this introduction. You can introduce yourself and then you can also introduce PPT to us. We also are joined by representatives of SSNIT, some very strong women. We have Divina Koromakini, Alberta Anand, and Nanesi. So from SSNIT, they will also be sharing with us their insights. The idea and the objective of this session is that we are all educated on pensions and planning for our future so that we can secure our tomorrow today. So to our speakers, I appreciate your time and your expertise, and I look forward to hearing from you. For our audience, thank you so much for joining us. Thank you for taking 1 hour, 30 minutes of your Friday to be on this webinar, and I hope that after you would have received very useful insights that would be relevant for your pension planning. You can feel free to use the chat box. On a scale of 1 to 10, 1 to 5, you can share with us how much you know when it comes to pensions, how prepared you think you are for your future, and whether you're currently planning contributing to a pension plan. So you can please use the chat box for that. And it's good for us to see where our audience are coming from, and then we can know how to tailor our responses. All right, so enough from me. I will now hand over first to SSNIT. I will hand over to Lavina. Kindly introduce yourself, introduce to us SSNIT, introduce the rest of your colleagues to us. And I've made you a co-host, so please feel free to start your presentation by sharing your screen. You're welcome, Lavina.
Thank you, Tracy. As you rightly said, my name is Lavina Koromakini. I'm the Corporate Affairs Representative for Accra South Area SSNIT. And then with me is Alberta Anang, is a Member and Client Service Officer at Airport City Branch. We are supposed to have Nanesi with us, but unfortunately, something came up. She couldn't make it. So the two of us here are going to present to you, basically. So let me see if I can share the screen.
You're welcome. I've made you a co-host, so I think it should work.
Okay. I hope I've been able to share, right?
Yes, we can see your screen.
Okay, thank you. So we'll start with SSNIT. Basically, what SSNIT is about, and then what we do. A moment, please. I'm having a little challenge here. So when we talk about SSNIT, SSNIT is basically the administrator of Ghana's basic national social security. That's the first tier of the pension scheme. We have the Pension Act. We are guided by the Pension Act 2008 Act 766. And our core responsibility is to replace part of lost income of workers in Ghana due to reasons for retirement. And when we talk about reasons for retirement, apart from laziness, we have the three main causes or reasons for one to retire. The person may retire as a result of old age or as a result of permanent disability, or the ultimate, which is death, which obviously nobody wants to hear about it, but it's something we cannot change anything about. So in case of these contingencies, SSNIT is there, and then we replace part of your lost income. So we have our members being formal, informal, and then self-employed workers in Ghana. So if you get it, you realize it's not limited to those in formal employment or those in a government institution or private organizations, but anybody can be a member and a contributor of SSNIT. The age bracket is between 15 and 45 years if you have never ever registered with the trust. 15 years is the minimum age, and then the maximum age is 45 years. However, if someone, a worker, somebody who used to contribute, who found him or herself in a formal employment, has lost a job and is now into the informal sector or is a self-employed, so far as the person has once registered with us, even after age 45, the person can join the scheme. So just as the name is, Social Security and National Insurance Scheme, realize that SSNIT is also an insurance scheme. And what do we cover? We cover earned income. So you are insuring your income towards contingencies as in old age, contingencies as in permanent incapacitation, and then death. So just as I said, we cover lost income of workers through the payments of monthly pension in the event of the 3 contingencies we've mentioned. But before we are able to provide the services, it means that we need to register people onto the scheme. So we register the employers, and then we register the employees or workers, whether self-employed, informal, or formal sector. After employing them, after registering them, we collect contributions, and then we manage the records of our members. We invest excess funds of the scheme because the scheme runs on generation of contracts of generations. So the excess funds we receive, we invest in it. We process and pay benefits to eligible members and nominated dependents. We say eligible members because if you have not contributed to 180 months, that is 15 years, then you would not be able to receive pension, but will be able to give you back your money as a lump sum. And then nominated dependents will affect those who are our members who are deceased. They'll have nominated dependents whom we shall pay their benefits to in case such contingencies come up. So, as I mentioned earlier, we are guided by the law. Initially, we were running the scheme on PNDC Law 247, where the employer contributed 12.5% and the employee contributed 5%, making 17.5%. But from 2010, the new law, which is the Act 766, as amended in 883 of 2014, we are using the 3-tier pension scheme, where the employer contributes 13%, deducts 5.5% from the employee's salary, put it together, and then redistributes to the pensions schemes. So SSNIT takes the first tier. SSNIT is mandatory, basic social security scheme. So it is mandatory. We run the first tier, which is the pension scheme. That is the monthly payment of salaries until the person is dead. And then we have the tier 2 and the tier 3. Tier 2 is also mandatory, fully funded and privately managed occupational pension scheme. And the tier 3 is also fully funded and privately managed Provident Fund and personal pension scheme. So you realize tier 1 and tier 2 are mandatory. So when we receive the 18, when the employer puts together contributions to the tune of 18.5% of the basic salary. 5% goes to the corporate trustee, that is tier 2 of your choice. And I believe that is where Mr. Poli will come in and explain further. Then 13.5% comes to SSNIT. When the 13.5% comes to SSNIT, 2.5% is remitted to the NHIS, the National Health Insurance Scheme for healthcare. And then SSNIT maintains 11%. So out of the 13.5, that is contributed to SSNIT. 11% is what is retained in SSNIT towards our pensions. For this reason, if you're a SSNIT contributor, then you should have access to NHIS. When you are going for your renewal and other things, your premium is already paid by SSNIT, so that you don't pay any premium. The only thing you may have to pay is their processing fee, which currently I hear is about 8 cedis, also between 6 and 8 cedis. Now, what is the modalities? How do we get this done? So that, as I mentioned, the employer deducts 5.5% from the worker's basic salary. The employer adds 13% of the worker's basic salary to the 5.5% that has been deducted, making the 18.5%. The employer remits 13.5% of the worker's basic salary to SSNIT, and then remits the 5% to the tier 2 fund manager of choice. I mentioned earlier that this scheme is open to all workers in Ghana, irrespective of your status of work. And for that reason, if you don't find yourself in the formal employment where your employer will take out the deductions and do it on your behalf, you can contribute as a self-employed. So in that vein, we have a conversation with such a person to declare monthly earnings. This part is a bit of a challenge for a number of self-employed. So we don't actually, it is not cast in stone where we say, okay, how much are you earning at a salary at the end of the month? We have deliberations, and then we are able to determine how much a person can contribute, let's say a day, a week, a month. So we will help the person do the computation and then give the amount to the person to be paying. And our payments for such group of people is very flexible. You can do it monthly or quarterly or semi-annually or annually. The most important thing is at the beginning of the year, we have the deliberations, and then you declare your salary. And that can be adjusted yearly. Unlike the formal employment, that can be adjusted at any time. If you are self-employed, the only difference is that your salary can be adjusted annually. So now we are coming to what we provide, the value we provide as SSNIT. We first and foremost, our benefits, we have the old age pension, the survivor's lump sum, invalidity pension, immigration lump sum, and then old age lump sum. When we talk about old age pension, that is when we are referring to a person who has worked till the age between 55 and 60 years, where 60 years is mandatory retirement by our law. But there are times that a person is 55 years and a person may want to retire. It is accepted by the law. But then we have people who are also in a kind of job that exposes them to high risk job, like the mines, those exposed to chemicals. So those people can, but per the law, their retirement age is 55. So when we look at all, we will pick each and then talk briefly about it. We will pick the old age pension. So the old age pension is where I said you should be 55 to 60 years. And what are the qualifying conditions? You must have contributed a minimum of 180 months. Now this 180 months, that is the equivalent of 15 years, will earn you a pension right of 37.5% of your highest qualifying salary for life. So if I'm using this as an example, before I come to the example, so 180 months will qualify you for pension, but the more you contribute, the higher your pension rights. So you can contribute to a maximum of 420 months, which will earn you a pension right of 60% of your highest qualifying salary for life. What does it mean? It means that if you have contributed for, let's say, this 420 months, and you are going to earn 60%, your pension will be 60% of your current, the highest salary, not the current, but the highest qualifying salary for your life. We'll go further into it and you will see. So if you attain a minimum of 55 years, you can have a reduced pension. That is, if you don't find yourself in the high-risk work job, then you qualify for reduced pension. But if you should go through to the age of 60 years, then you qualify for full pension. So for instance, if your highest monthly contribution for a period of 3 years is, let's say, 270 Ghana cedis, you can earn a pension, monthly pension of between 750 Ghana cedis and 1,200 cedis every month, depending on your pension rights. So the 270, the 750 will be a pension right of 37.5%. And then the 1,200 will be a pension right of 60%. So, and aside this, the pension will also be increased every year till you pass on. So last year, 2024, we paid out pensions of over 5.77 billion Ghana cedis. In this case, I can confidently say that SSNIT assumes longevity risk because unlike any other insurance company, your premium will be based on other factors. But for us, whatever you are contributing is going to be your premium, irrespective of the risk factor. So let's look at the factors that is used to determine our pension. First, the earnings declared to SSNIT. We use the higher, we say that the higher your earning, the higher your pension. So how much are you declaring to SSNIT as your basic salary, upon which you make that 11% contribution to us? Then we also consider the number of months of contributions. The longer the period, the higher your pension rights. That is the replacement ratio end. So if you have contributed for the minimum of 180 months, as I mentioned earlier, your right is going to be 37.5% of that earning. But the higher you go, the higher the ratio increases. And then we look at your age. Are you retiring at 60 years or you are retiring at 58 or 55? The highest retirement factor is 1. That is 100%. If you are 60 years, you have served to the minimum, to the maximum. So 100% is 1 in nominal terms. But if you are 55%, then there's going to be a reduction factor. And that reduction factor ranges between 0.6 to 0.99. That is 60% to 99%, depending on the age of retirement. So to compute your pension, you have first the average of the 3 best annual salaries. So year 1, best year 1, best year 2, best year 3, we put them together, divide by 3, then we get the average of the best annual. That is the data on salaries. We pick this from the data on salaries or contributions. Then we multiply by your pension rights. That is what I said, that it depends on how long you have contributed to the scheme. And then we also multiply that by the early retirement factor, whether you are full pension at 60 years, which is 100%, or in nominal terms 1, or you are 55, which is 60%, in nominal terms 0.6, and that will give you your annual pension. If you want to know your monthly pension, then you divide by 12, then you get your monthly pension. Now, some of these details, when you pick your statement, you get all these details on your statement. So our advice that we normally check our statements. This is just an overview. So the years of contribution and the pension rights. So if you have contributed 15 years, you are going to get 37.5 as I've mentioned. You have contributed, let's say, 30 years. Your pension right is going to be 54.38, and it runs through to 35 years and above, which is 60%. So what it means that if you have contributed more than 35 years, you still have 60%. The highest is the 60%. Then when we look at the age retirement factor, the reduced pension from 55 to 59. So 55, you have 60%, 56, 67.5, 57, and it runs through to 59, 90%. So 59 point something will also push you higher to 60 years where you get your 100%, which is 1. Let's look at some basic salary levels of contributors. So there are people who annual or who monthly income is 500 cedis or less. We have about 16.73% of such people on our data, and their contribution is 55 cedis or less. So if 55 cedis or less upon retirement, depending on how long, we are using the highest pension rights, that is 60%. On retirement, such people are going to receive 300 cedis or less because they are contributing 55 cedis. Now, for us, we have a minimum pension. So anybody who is supposed to take anything less than 300 cedis is pushed up to 300 cedis, and then it moves on. Let's look at somebody who is whose salary is 3,000 Ghana cedis or less. Such people, we have about almost 1.3 million on our database, and they are 60%, 60.54. Such people are contributing 300 cedis or less. And with the 300 cedis of contribution, they are going to receive, if they've attained the highest pensionable rights, they are going to receive 1,800 cedis or less. So they are contributing 300 cedis, let's say as at now. And should they go on pension today, they are going to receive, out of the 300, they are going to receive 1,800 cedis or less, depending on the pension rights. Then our maximum insurable amount, which is now 62,000 Ghana cedis. Since this is 2025 data, you realize that we have only January contributions that have been received and part of February. But then as at January, we had only 2 people within that bracket, and their pension is going to be 36,600 and above on a contribution of 6,710 Ghana cedis. We are going to have a glimpse of the league table for 2025, those who are highest paid pensioners and lowest paid pensioners. We still have people who were on the old scheme 247 with us. So such people, the highest pensioner as of 2024 was receiving 186,777.58 as a monthly pension. And then with the increase, as I said, every year we increase pensions. That such people are receiving 210,792.37 Ghana cedis every month as pension. These are the highest paid pensioners. Then when we come to the lowest paid pensioners, you realize, though we said pension was increased by 10%, realize that the highest portion of the highest paid pensioners' pension is used to cushion those at the lower brackets. So as at December 2024, the lowest pensioner was receiving 209.1 And then in January, there was a 25.74 increase to 514.41. These are for those under the 247, the old law. But when we come to our current law, the one we run, then you realize the highest paid pensioner was 26,509. And then when we came to this year, 2025, they are receiving 28,703, an increment of 8.27. Whereas the lowest, who was also 409, has received an increment of 25.74%. So in all, we say that yes, SSNIT pension gives superior value to invest in members' contributions. What do we mean by that? We are looking at the cumulative rates. So a member on pension for 7 years, as at 2025, must have had an overall pension increment of more than twice. That is over 140.03%. If you have stayed longer, you realize that what you are earning continuously increases. We say that we give good values because if the number of times SSNIT pension payments exceed contribution, should you have invested in 91-day treasury bill rates, that is compounded quarterly. Using even the old scheme, 17.5%, we picked data of 7,600 pensioners. Those who have been on the scheme for 12 years have received almost twice of what they would have received if they had invested in this treasury bill compounded quarterly investment. If it would take a member, how would you exhaust? If you should invest your treasury bill, if you invest your contributions into treasury bills, which we know is the safest using the new law, the average number of years it would take for a member to invest and then benefit from it will be 9.37 years. But when you are on the SSNIT pension scheme, we don't look at it from that angle. As I said, we'll continuously pay you until you die. If your investment is limited to just a 5.5%, then by 3.2 years, you have exhausted your money. But for us, the annuity period is 15 years. That is why we say that you contribute 15 years, you benefit 15 years. After 15 years, your money in SSNIT would have ended, would have finished. But so far as you are alive, we'll continuously pay you. The only thing is, should you die after the 15 years, that is after age 75 years, then your beneficiaries wouldn't enjoy any benefits because you have already exhausted your benefits. But should you die before the 75 years or even whilst in service, your beneficiaries will benefit from the remainder of your contributions. And the next question is, what if the person is unable to contribute the 180 months? That is what we call old age lump sum. So we'll give back all that the person has contributed with interest and then pay it back to the person. Total yearly contributions plus interest, and then we pay back to the person. So that's about the old age pension and the lump sum. When we talk about the invalidity, we are talking about those who are unable to work. In maybe the course of the work, something happens, and then you become permanently disabled for whatever reason. And doctors have certified you permanently incapacitated. You cannot work again. Such a person, irrespective of the age, whether you are 32, 33, whatever your age, will put you on full pension, like somebody who is retiring at age 60 years. And they will pay you till you also pass on. We have some few statistics, but because of time, I will not go into it. Let's look at the survivor's benefits. That is the lump sum. And to qualify such a person, the member who is deceased should have contributed at least 12 months within the last 36 months. So when the person dies, then we convert the person's pension and pay it to the dependents as lump sum, bulk money, once and for all. They will not be on pension, but they are going to benefit as lump sum, once and for all. And this is only for nominated dependents. So if you're a dependent and you're not nominated, we will not be able to alter anything and pay you anything. However, if it becomes a court case, if the court comes in, then we'll have to be waiting till the court takes a decision, after which we can process and pay your benefit. So at this point, I'll always say that it is very important for us to update our nominees' record, our dependents. Sometimes you start life, you're a single man, you're a single woman, so maybe you nominated your parents. Then maybe along the line, your parents die or you get married, you start having children, you never change your nominees. Your parents have already predeceased you. So when anything happens to you, what is on the paper is your parents. We are now going to look at maybe PNDC law will come in and it will end up affecting your family. So please, let's ensure that periodically, a maximum of 5 years, we look at our SSNIT statements. Now we made it easy. If you have updated your email with us, you can have it quarterly. If you want to go to our website, you go to our portal, you can log in and check your statement. If you want to look at the beautiful faces in the SSNIT offices too, you can go and print your statement and view at any time. If you want to use the short code, *711 *9#, you can use it and you can always check your statements. The immigration lump sum is also paid to immigrants who have contributed to the scheme and are permanently migrating to their home countries. They are not coming back at all to Ghana. So we put it together, their contributions and the interest, and then we pay to them. But these are limited to those who are non-Ghanaians. If you are a non-Ghanaian, then you qualify for it. But if you are Ghanaian, you cannot qualify for that. So what must you do? First and foremost, register and ensure that your 515 contributions is deducted from your current monthly salary. So we have to check our pay slips and ensure that what is supposed to be deducted is deducted. And then if you have any change in your name, in your contact details or anything, kindly reach out to us, SSNIT. I'll give you a touch point. Reach out to us and then we'll be able to update your details with us. It makes it easier to process your benefits upon any of these contingencies. We also request that you update your list of nominees, that is your beneficiaries. I've already mentioned it. And then let us know when maybe your salary is being underdeclared. Let us know. We have a way of dealing with our employers. They understand us, we understand them. We can talk behind the scenes and get it done right. Check your statements regularly and ensure that your contributions are paid on your full earnings for a better pension. Let's have our takeaways, then I'll pause for our questions. We say that the SSNIT scheme is good and that what you put in determines what you get. If you put in something small, your pension will be very small. If you put in a higher earning, one thing we should know that our earning does not include allowances. Your basic earning does not include allowances. So let's be mindful of that. You take full advantage of the scheme by ensuring all your income earns, so that if you are having 2 or 3 jobs, please ensure that all the employers pay for you. The higher your contribution, the higher your earning. And then you'll be guaranteed a life insurance because you'll be paid until you are dead. And once you qualify, you receive your pension for life, which is increased every month, every year. Your contribution with SSNIT is safe and it guarantees you value which is incomparable to any other in the scheme. It is for life. So for contributing for only 12 months within last 36 months, prior to any occurrence of permanent disability or death, members are guaranteed monthly pensions with annual increase until death. So register with us today, contribute regularly, and enjoy the benefits of the SSNIT pension scheme. These are our touch points. We are on the various social media platforms at SSNIT Ghana. If you want to call us, you call our contact center at 0302-611-622. If you want to send us an email, contact center, the center ends with re@snitghana@snit.org.gh. Our website, www.snit.org.gh. If you want to WhatsApp us to, our number is there, 0500-003050. Thank you very much. We'll be on standby for your questions.
Thank you very much, Lavina. This is really insightful. I see that people have a lot of burning questions and the chat box is blowing up with questions.
Okay.
Before we go to that, I would like to let Mr. Polly come in. And I see he's already really busy in the chat box responding to some of the questions. So thank you very much, Mr. Polly. I'd like him to come in and also present. Then after we can handle all the questions together. So Mr. Polly, please, the floor is yours. Thank you very much again, Lavina.
Thank you very much, Madam. You've already introduced me, so I don't need any more introduction. My name is Kofi Polly. I'm representing People's Pension Trust. People's Pension Trust is a corporate trustee registered under Act 788/2008. Our regulator, the National Pension Regulatory Authority, has given a license to operate as a corporate trustee. We basically have 3 products. We have the Tier 2 product, which we call Occupational Pension Scheme. We have the Provident Funds scheme, and then we have the Personal Pension Scheme. Because of what my sweetheart just did, let me quickly do a quick presentation on the pension architecture we have currently. And then from there, I'll move to my slides. He's done a good job for me, so my work is going to be quite easy. Please, am I on?
Yes, we can see your screen.
Okay, good. Yeah, so a brief history of the Pension Act. Let me skip just one. As Lavina said, we kind of operate a 3-tier pension. Tier 1, as he said, is basically SSNIT, and he's talked about the contribution rates and all that. Now, then we have Tier 2. So, as he said, the 18.5, which the employer will contribute 13%, employee will contribute 5%, making it 18.5%. 13.5 will go to SSNIT, and 5% will go to a Tier 2 pension scheme. A Tier 2 pension scheme will basically operate by a corporate trustee licensed by NPRA. Now, under pensions, we have 2 main types of schemes. We have the defined benefit scheme and the defined contribution scheme. The defined benefit scheme basically means that once you join the scheme, there's a formula to calculate your pension. And that's what Lavina talked about, your best 3 years, 60%, 37.5%, and all that. With a defined contribution scheme, we are not interested in the frequency of your contributions. We're only interested in how much you have contributed and the interest that accrues on. And so Tier 2 is basically a defined contribution, and it's also mandatory. And then we have Tier 3. Tier 3, we have 2 types. Under Tier 3, which is a voluntary contribution, we have the Provident Fund. So technically, we say the Provident Fund is employer-employee assisted scheme, where here the employer decides that, look, I want to also do something for my employees. And so they come together and come under certain rules. So the employer can say, I will contribute maybe 2%, employee contribute 3%, and then that's money as a Provident Fund. They have their own set of rules. They basically pay a lump sum. Then under Tier 3, we have what we call the informal sector scheme. So the informal sector scheme, basically the idea was that we always say that in Ghana, we have over 85% of our working population in the informal sector. Now, these 2, Tier 1 and Tier 2, the way it is structured, because it's salary-based, is then not good for them because one of their characteristics is that they don't earn regular income. So the idea is that then we need to have a very flexible scheme that will accommodate some of these characteristics. So that's what the information. That I'll talk about that one in detail when I'm doing my actual presentation. Now, the next thing I want to talk about here is how the role of a corporate trustee. So as a corporate trustee, our role is basically to administer the financial data and then the bio data of our members. And so once we are set up, we need to do certain things. One, we need to come out with an investment policy. So the investment policy will now determine how we invest the funds or the contributions we collect from our members. Under the investment policy, we then need to go by the guidelines given by the NPRA to invest our funds. And that is where the asset allocation comes in. So we have strict guidelines as to how to invest the funds. So we can't just get up on our own and say that, look, somebody wants a loan, go and give him the money. No, it has to go under strict guidelines. And some of the guidelines state that we should invest in government, in the money capital, equity, and currently we are giving 5% that we can invest offshore. And then we report to the regulator periodically, in fact, monthly. The other thing is that we need to appoint a custodian and a fund manager. And these two parties are very key. The custodian is basically a bank. So they have their custodian unit. And so all the money that are paid to us does not even come to the corporate trustee. It goes straight to the custodian bank. And then the fund manager advises us on how to invest these funds to be able to ensure that our members get very good returns. And of course, we do the fund administration, like I say, paying out accrued benefits and stuff like that. And therefore, in doing this, the corporate trustee must appoint these two people, the custodian and then the fund manager. The fund manager, basically, like I said, provide investment advice to the trustee and then help us to select our security that we want to invest in. The custodian keeps the assets and cash of the fund or of the scheme. And so, for example, the only way the money will come out from the custodian bank is when we are paying out accrued benefits, or in the case of personal pension schemes, where they can withdraw part of it before they get to retirement, withdrawals are being made. So I think this will be just to give a good idea of what the industry comes. And I would say that one of the best architecture in the pension industry is what Ghana we have. Because of this structure, what it means is that members' funds are very safe. And so in the event that even the corporate trustee should collapse, because the funds are sitting with the custodian bank, they can easily have the access to it. And another corporate trustee can take over the database and then go ahead and work on it. Okay, with that said, let me quickly go off. And then I come with my actual presentation. Okay, so if you can see my slides, I'll quickly go on. The topic was mastering your pension journey, or for that matter, securing your future today. And I'll just give a brief introduction. Then we'll look at categories of retirement capitals. What we have done at People's Pension Trust is to do a research and see how people can retire and retire very comfortably. And retirement, just as any other venture, you need a capital to go into it. And so we have broken the capital down into three: your health capital, your social capital, your financial capital. And after we've done that, we will conclude. And I was very excited when Levina said something that is very instructive, but for a lot of the time, people either decide to forget about it or decide not to hear it. Levina said something interesting. He said, let me quote here. He said, they replace part of your lost income, not all your lost income. He said part of your lost income. So when we get to the financial aspect, we talk about that. So you see, retirement planning is a process. I mean, I would say that retirement is also part of the transition. For example, when you're in secondary school and you want to go to tertiary education, you are transitioning from one level to the other. If you don't take your education, so you don't prepare, you may not be able to enter the tertiary institution. And so retirement is also a transition. And so today that you are strong enough, you are working. If you don't plan properly, you'll never be able to transition to old age and enjoy your old age. And yes, most people always, when they think about retirement planning, they think about the financial aspect. It's very key. But financial alone will not make you enjoy your retirement. And that is why we would like to address other key capital. So we say that to retire comfortably and enjoy your retirement, you need your financial capital, your health capital, and then your social capital. Now, why do you need your social capital? One of my favorite writers, J.C. Maxwell, says that your network is your net worth. And so it is important that you have people around you, you have friends, you have family around you in your old age. Because in your old age, you may need people around you. If you don't have people around you, you may have all the money in the world, but you will not enjoy life. That is why in our country we say that nipa na mede, nipa, meaning that yes, it's nice to have people around you. It's nice to enjoy people around you. But this is something that you must consciously build right from the word go. We have had instances where people even leave their institutions and they go on retirement. They come back needing help and nobody's ready to assist them. We've had instances where even in the family setup, and people say, oh, don't mind him. When he had his money, he enjoyed it all by himself. And at that time, you need people around you. Unfortunately, we had a system where it was easy, but we have consciously broken it down because in the olden days, we have a very strong family support. And this family support was so key that even when people are in need, the family comes together to assist. Now we decided to build walls around us, and therefore we are not socializing. A friend told me a story so interesting. He said he moved into a gated community, and he was always driving out. He meets people, and they'll be waving him. Because the people were walking, they were going for their normal walk and jogging. Then he went on leave and tried to also do the walking and the jogging. The same people who were waving at him would meet him and pass him by, and I was like, what is going on? Only to realize that they know his car, but they don't know him. And that is why what we have become, walls around us. And therefore, if you don't make a conscious effort to build your social capital, then you'll be in trouble. So some of the things that we may want to do is to be people of influence. How are we influencing others? How are we creating that network? And in Ghana, I think it is quite easy. We have these old students, old boys, old things, associations, year group associations. We have family. Yes, I'm not saying that family always go to, but you can pick a phone and call an auntie, a nephew, and this just to stay in touch, just to know you're around, and that helps. The next thing I want to talk about is your health capital. Because what we need to understand is that we say you use your health to take care of your wealth, to make wealth, and then you use your wealth to take care of your health. The question is that if you don't live properly now, if you don't take good care of your health now, then the time will come that all the money you have made, you're going to use it to take care of your health. And therefore, you may not even enjoy the money that you thought you were putting down. So it is important that right from the word go, we take serious our health issues. And it's not so difficult. I mean, these days, you can even walk to a hospital and say, I'm coming to do my checkup, and they're going to do it for you. Especially we the men. One of the things I ask people all the time is that, how often do they take their cars for service? And they'll quickly tell you, oh, every 3 months, every 6 months, I'll go and check my car oil, I'll do this, I'll do that. The question is that, why are you doing that? And they will tell you point blank, I need to maintain my car so my car lasts. The next question is that, by you as a person, when was the last time you went to medical checkup? When did you go and service your body? And then they have not done it for ages. And so it is important that we take care of our health. Our lifestyle will eventually show in our old age. Therefore, this is the time we need to be very moderate in all things that we do. Alcohol, the type of food we eat, exercising, they are very important we do that. But when we do that, then we are going to know the very good health, and then we can enjoy our capital that we built over the years. Now, this is the elephant in the room, financial capital. When we talk about financial capital, it is not so much about how much money, but being money smart, especially now that we are trying to build up the capital. The good news is that in Ghana, it is structured said that you can always take one, you can use the Act 766, which, for example, if you're a worker, you're already contributing to SSNIT. Then you have tier 2, obviously. You can also do tier 3 to enhance your pension scheme. And then you can also do what savings and investments. You can buy so much assets that eventually will make you money. So let's quickly go through. I think we've talked about this one. And at this stage, I'll take advantage to talk about what we have at PPT. For example, PPT, we operate a tier 2 pension scheme, which we've talked about. 5% will come to us. We invest, we pay you off. Then we have a tier 3. So tier 2 have in 2 parts: the Provident Fund, and of course, we call it PPT Personal Pension Scheme. Now, the interesting thing about these two schemes is that there is a tax component that you can take advantage of. And so the law says that if 35% of your income is going to any pension scheme, it will be tax exempt. And so what it means is that if your salary is, say, 100 cedis, you can use 35 cedis to go into your pension funds, and then the rest will be tax will be applied, which means that by percentages, you'll be paying a little tax, and even you can drop down to a lower band where your tax percentage will also come down. Now, with PPT, what we've done is that we have what we call the PPT Personal Pension Scheme, a very flexible scheme. Originally, we tailored it towards the informal sector workers, but we realized that it fits even formal sector workers. So here, what we say is that once you become a member, we create 2 accounts for you. We create your savings account and the retirement account. Every contribution you make, we divide into 2 equal parts. The 2 equal parts that we divided into, one goes into savings, one goes into the retirement. With the savings account, 6 months after initial contribution becomes a form of I'll call it like a current account. You can always come and withdraw part of all of it anytime of an emergency. With the retirement account, it's also when you are going on pension or retirement, or the retirement, then we pay it out to you. But of course, when you are leaving the scheme and you have funds in the 2 accounts, we collapse and pay it out. And even in paying it out, the law says you should pay lump sum, but we realize that lump sum can also be tricky. So we have agreement with some insurance companies who will sit down with you, and if you prefer an annuity, then they will do it on an annuity basis. Annuity basically means that they are going to insure your interest or the investment and can tell you that, okay, since you have maybe 100,000 every month, you're going to pay you 5,000 for the next 20 or 50 years, and then you sit and agree and go. Now, the interesting thing is that the contributions are not fixed. They are very flexible. So you decide how much you want to pay per anytime. Again, payment is not also fixed. As you see, some are paying daily, some are paying weekly, some are paying monthly. We have some cocoa farmers who are doing seasonal payment, or they say they make money when they are selling their cocoa beans. So it's quite flexible for anybody to come on board. And then when you decide that I want to pay, say, 10 cedis a day, if anytime you don't have, we are not going to chase you. We are not going to pay a penalty for not paying. It's just up to you. On the other hand, even if you said 10 cedis a day, and then there's a windfall and you want to increase it, it's acceptable. So it's very flexible. Even if you said you want to pay daily and then you can't and you want to do monthly, we accept. So we are very, very flexible. And what's also done is also rely on technology to push this agenda. So even on board, it's very simple. All you need to do is dial *789 *111#. Once you dial that, you go through the onboarding process, and then you will choose whether you want to pay daily, weekly, or monthly. Again, the payment, if you're especially on MTN, then you have what you call one-time approval. So if you say every day I want to pay 10 and you pick it, then once there's money in your mobile wallet, it will sweep it off. So that's it for the how you can take advantage of the pension, the act to also build your financial capital. And in this one, it doesn't matter whether you're a formal sector, informal sector, or you're living outside Ghana, you can always get on board. For those who are outside or those who are very tech savvy, you can go to our website and do all this as I'm talking about. You can even pay using your card. Now, another thing for your financial capital is to develop a saving strategy. It's important that we learn to save. Personally, I tell people that I don't like saving. I like investment. But the truth is that if you don't save, you can't invest. You need to save so you can invest. So it's important we develop a saving strategy. There are so many strategies. I will just mention 2 of them. So some people call it 80-10-10. And so by 80-10-10, what they try to say is that if you have your income, and this is especially for Christians, 10% you pay for tithes, you save 10%, and you use the 80% for your expenses, your rent, your transportation, your electricity bills, your water bills. Others also say that, okay, do 50-30-20. So what they are saying is that save 20%, use 30% for life, enjoy life, and 50% use it for your normal expenditure. But you see, in all this, one of the advice I give is that you must have a budget. So isn't it interesting? The whole Ghana, we are even going to have a budget. How much more we the individuals? It's when you have a budget that will help you to manage your funds and be able to save to invest. And it's also important that we look at our everyday expenses. Everyday expenses, if you're able to take care of it very well, will give you room to have some excess funds to invest. And so as somebody put it, our poverty is not so much the money that comes into our hand. It's so much how the money leaves our hand. So if you have a budget, it will help you to plan well. One of the things that you will do is impulse buying. And impulse buying are things that we do daily. And sometimes you ask yourself, do I even need what I bought? It's important we do that. We should build wealth and not debt. By that, what we are trying to say is that we should be careful the kind of things that we take. Yes, I believe in high purchase and all that. But the point is that assuming you are left to say maybe 3 years to go on retirement, and your office is giving you a car loan that you are supposed to pay by 6 years. What it means is that you leave employment when you are not really earning income, and you still have to pay for this car. How are you going to do it? And so we must be careful the things that we are indebted to. There are certain things that we are indebted to, it doesn't help us. Yes, assets. Assets are also very key, but there's always a thin line between assets and liability. For example, a land can be considered an asset. That same land can be considered as a liability. Assuming you bought the land, so anytime there are land guards there, you have to pay them, you build up to a certain level and they break it down. At that point, the land has become a liability. How are you going to make use of that land? Or for that matter, you build a very nice building in the hope that you want to use it for rent. But the area that you have put it, if it's a 5-bedroom house, the people around the area cannot afford to rent a 5-bedroom house. How are you going to make money out of it? Because nobody's renting it. And that is why in having assets, we must always think about how easily it can be converted into liquid cash. If it cannot be liquidated into liquid cash, and so our private savings are very key and investment very key. While we rely on the pension schemes tier 1, tier 2, and 3, we should also make sure that we have our private savings and investment. In conclusion, I'd say that it's important that we start planning early and ask ourselves, one key thing we need to ask ourselves that, where do I want to retire? But if you know you want to retire and live on an island all by yourself, then you must have money to go and buy that island. If you want to retire and live in a very posh area, then you must plan towards it. Okay, so it's important that we start planning now. And we should also plan for the possibility that we are going to live longer than we expect, because you never know. It's key we create a financial plan, we pay our major debts, we look out other things that bring joy in our life. You see, it's important that we don't make our work our life. If we make our work our life, then the day that we leave the work, somehow we think that we are irrelevant in society, and that can bring about depression. So when you are retiring, you should think about what you are going to do. You should begin to think about it as quickly as possible. You have some hobbies, you have some things you want to do outside what you normally did. That will bring you joy. You want to give back to society. What are some of the things that you want to do that will bring you joy? Because trust me, imagine you were going to work you leave your house around 6 a.m., you get home around 6:30 or 7 p.m. Then suddenly you wake up, you have all the time in your hands. What are you going to do with it? Yes, initially it can be fun. I want to travel here, I want to go here. How long can you do that? Within a matter of 1-2 years, you are fed up with it. The next thing is that, what are you going to do with your life? And this is where it comes in. Build good network around family and friends. We talked about social capital is very key, because they will keep you going. Yeah. And then finally, I'll say that I'll go back and talk about what my sister said earlier on, that they are replacing some of the lost income. So let's look at the calculation that he did. He said that they use the best 3 years. So let's assume that your best 3 years, after they've done all the calculation, and then your best monthly salary is 100 Ghana cedis, and you're even going to get the maximum 60%. What it means is that the following month, you are going to rely on 60%, but you're so used to the 100%. So it means there's a gap. How do you fill that gap? The other thing that makes it even more serious is that in Ghana or in West Africa or further in Africa, when you go on retirement, your expenditure even increases. Because when you go on retirement, you have become a opinion, an elderly in the family. Everything that is happening in the family, you have to get involved. Funerals you attend, everything. And that increases your expenditure. And therefore, there's a gap. And this is where you can fill the gap with your tier 2, your tier 3, and your personal savings. On that note, thank you very much, Madam Moderator.
Thank you so much, Mr. Polly. I really like that you look at different areas. So beyond the financial planning, lifestyle changes we can do to be able to have a pleasant retirement. So thank you for drawing our attention to these areas as well. We'll move now to the questions. So I'll invite Lavina and Mr. Kofi Polly back again. In the meantime, people are asking whether the presentations can be shared. So kindly confirm if it's possible to have the presentations to be shared around for those who have joined us today. And yes, now to the questions. Before I move to the questions, kindly also leave your contact details, for SSNIT and for PPT inside the chat box. And you mentioned some short codes here and there, so kindly drop that in the chat box for people as they are asking for it. And so I'll start first with Lavina. Someone is asking whether a student can contribute voluntarily. Is that possible? And how do they go about it?
Yes, Tracy, students can contribute, but let me give this scenario for all of us to understand. It's like you want to insure your car, a car you are driving. If you don't have a car, will you be able to insure? No. So if you're a student and you don't have any source of income earning, you cannot contribute. But we know that nowadays, because of the gig economy, most students are working in the gig economy, that is the online business. So if you're a student, so far as you are working, you can contribute to the scheme. That is, if you are 15 years and above, you can contribute to the scheme.
Thank you for that. Yeah.
And then I saw that, is it that same person was asking if you can contribute after age 60 years? Unfortunately, we are unable to receive contributions after 60 years. However, if from what he's saying, if you start contributing at age 35, by 60 years, you would have made the minimum requirements for pension. And so I will always encourage that we shouldn't wait to find ourselves in the big job. Okay, this is my dream job. I've gotten the job before I'm contributing. That's why it's open to the self-employed as well. If you find yourself in the gig economy, please reach out to SSNIT. Our telephone, our contact details I gave, but I'll put it on the chat as you requested. We'll take your details, we'll register you, and then you start contributing. It's an aggregate of 180 months. So it's not straight 180 months, aggregate 180 months plus. So there can be breaks. So far as you're able to make the months, you are good to go. Thank you.
Thanks for that clarification. And another person was also asking how the benefits can be claimed. So is it a straightforward process if you are finally retired and then you want to claim your benefits?
Yes, please. I'll allow Alberta to respond to this one.
Okay, Tracy. So to claim your benefit, you can walk to any SSNIT branch with your, and then you provide us with your bank details. Okay, once you have made the one, you've qualified, you walk to the branch with your bank details, and then you start the process. And then a SSNIT number. That's all you need. A retirement letter, the SSNIT number, and then your bank details. That's all you need to start processing for your benefits.
And I'm also curious, now that we are in the age of technology, how is technology affecting these processes? And do you think it will get to a stage where we do not necessarily have to walk into any SSNIT branch, but we can do everything from the comfort of our homes?
That's right. Even now, you can start the process from our portal. The only thing is we need to confirm your identity with your live fingerprints. So you can start the process, but you still need to come to the branch for us to confirm your identity with your live fingerprints. So just as you said, as technology keeps improving, maybe at a point in time, there could be a link where you can confirm that from the system. But as it stands now, you can start the process from the portal. Right. So you just come to the branch for your confirmation of identity.
And someone was also asking during your presentation, Lavina, on the pension right, whether that was monthly or yearly.
The pension right is yearly, but then it's converted into monthly. So after the 180 months, that gives you the 37.5. Every month contribution attracts a pension right. Every month attracts a pension right. Is somebody? Sorry.
No, please proceed.
Yeah, so it is actually monthly.
Right.
Yeah.
Right. Okay. Thank you. I would like to bring Mr. Kofi Polly back, and can you kindly answer this? So someone is asking, what if a person is deceased? So I contribute and then unfortunately something happens. How can your beneficiary claim the money?
Yeah, so for all of us, SSNIT corporate trustees, one, we need evidence of death, and the evidence of death could be burial certificate, death certificate, and I know SSNIT, but at least I can speak PPT. We take even obituary, the program for the funeral, we take all that to the extent that we even take letters from opinion leaders. Because there are some areas it will be difficult to get all these documents. And so once an opinion leader, a chief, a malam, a sheikh, assemblyman, even writes that he knows that this person has passed away, we take that one up and do our own investigation and pay the claims. What I always tell people is that from where we sit, we can never know that our member has passed away. And so it is important that you, the member, inform people around you that maybe you're involved in something like that, so that when it happens, they can then take it up and come. However, in giving that information, you must also be careful you don't give all the details. Because assuming that you go and tell them, oh, my beneficiaries are A, B, C, D. I give you 20%, I give you 30%, I give you 50%. That could create problem. Even if you're not lucky, they may push you quickly so that they can come for the funds. I can't appear push you and come and take the money. So just inform them and make your ID, your number, the scheme numbers easily available to them so that when it comes like that, they can come to the offices of SSNIT or us and report that our person has passed away, and we take it up and then we pay.
I'll bring SSNIT back on board shortly to answer the same question. But Mr. Kofi-Polly, I want to check with you. What would you say are the biggest mistakes from your experience people make regarding their pension plan, and how can we mitigate these risks?
I think the biggest problem, and that's why I'm happy that we're having this conversation, is that people put it on the back burner. People think that I will never go on pension. And people think that it is very far away. It will not come close. Before it's age, it comes close. And so we don't really plan for our retirement. Once we put in a plan, retirement can be enjoyable. Levina was saying something about somebody who said it's 35, and he said something that it doesn't matter what. You see, the interesting thing about the SSNIT scheme is that if you look at even the formula, at an early age when you're contributing, what you're actually doing is building up the number of months for your pension right. Because let's face it, in Ghana, your best 3 years salary is almost your last 3 years salary. Unless something happens and you're demoted or you're fired and you go and start all over again. Therefore, at that early age, when you are contributing, you're actually building up your pension right. Again, if it's even defined contribution, because defined contribution schemes in Ghana, most of us are using the compound interest. What it means is that little drops of water makes a mighty ocean. So you put in even 1 cedi today, it gets interest the following day, it becomes your principal. So it does up very, very, very fast. And so we should start as early as possible. Plan our retirement. And it is never too late. No matter your age, it is never too late.
Thank you, Mr. Polly. To Levina and Alberta, can you kindly tackle the question concerning claiming benefits if in case of death? So if the beneficiary wants to claim benefits when the contributor is dead, how do they go about it and what do they need?
Okay, so just as Mr. Polly said, we definitely need an evidence of death. So that is either a death certificate, burial permits, there are a whole lot, obituaries, a letter from the church or the pastor, the imam, or there should be an evidence of death. So you come to our office or you call the contact center, you just inform us about the death of such a person. We will take some information from whoever comes to report. We'll get to know, because we need to find the next of kin and their location and other things. Now, you know, when anybody registers, there are some information we request from those people. So after that, we also do our own investigation. Hello?
Yes, we are here.
Yes, so we do our own investigation to confirm the death and then to confirm the identity of the beneficiaries, and then we process and pay.
Okay, good to know. Also, if another question, if you do not reach the 180 months and you are paid a lump sum, what is the interest rate that would be applicable for that payout?
The interest rate is 75% of the prevailing treasury bill rate. So it is not just one of 75% each year from the time you started contributing. So each year of your contribution, treasury bill rate, 75% of that you add on till their last contribution.
Thank you. I would kindly ask the audience to please mute your microphones so that we are able to hear our speakers answer our question. So please kindly everyone mute your microphones unless you're a speaker. Thank you. And okay, so another question to SSNIT. Does a Ghanaian who has permanently immigrated from Ghana qualify for a monthly pension or a lump sum payment?
So it depends, just as we said earlier, it's for all workers in Ghana. So if you qualify for pension, whether you are in Ghana or you have migrated, we'll pay you pension. If you qualify for lump sum, whether you are in Ghana or you have migrated, we'll pay you. But the only thing is, we pay to a local bank account. We don't take care of any SWIFT transfers.
Right. And another one, so if I attain my 15 years contribution at age 45 or 50, can I start assessing my benefits or do I need to wait till 60? I think you touched on this question.
Yes. So you cannot you cannot claim your car insurance, your car accident insurance if your car has not attained or gotten an accident. In that same case, you cannot claim your benefit if you have not reached 55 to 60 years.
Right.
But the one thing we should know is 15 years is the minimum. So you must continue to attain the highest pension rights.
Thank you very much. So please, kindly, we still have some time. So if there are any further questions, you're welcome to drop them in the chat box and then we would address them. In the meantime, I hope we were very attentive and yes, we were able to get some valuable insights from this session. So it's not a one-time thing. It's not something we do when we are nearing retirement. You have to start very, very early as you can, and you have to keep at it. And you also have to keep looking at other areas. So apart from contributing financially, also make sure that you're taking care of your health, you're taking care of your social life as well. Another question to SSNIT. Can your SSNIT card be deactivated? I ask this because some NHIS office will tell you that your SSNIT card is not working, hence you can't link your SSNIT. You can't link your SSNIT number.
SSNIT card or SSNIT number can never be deactivated unless we have paid off. That is lump sum, where we don't have any business with you or a deceased person. So what happens is that is NHIS system. Usually, we update them every month of all contributors on our scheme. Sometimes there's a delay in cascading the information to the various regional and district offices. So if any person encounters such a problem, and the person is a SSNIT contributor, the person can call our contact center number. I mentioned earlier, it's 0302 611 622. 0302 611 622. We will often liaise with NHIS and ensure that they do the needful. So that is it. But before I know there may be other questions, but let me touch on these important things. We are merging the SSNIT numbers to the NIA or a Ghana card number. So if there's anyone here who has not done the merger, we'll humbly request that you do so. When you go to our short code, the short code, *711 *9#, *711 *9#. There are a lot of options there. You can merge your SSNIT and Ghana card number. You can view all other options, your statements, a whole lot, and then you can go accordingly. And as I mentioned earlier, all our digital platform is up and running. So, but before you can have full access, you must update your email address with us. That one too, if you call the contact center, if you are unable to walk to the SSNIT office and you call the contact center, we can update your email address, after which you can visit the digital platform, that is the web portal, the app. We have a SSNIT app. You can go to the app and then do anything you want to do, apart from nominee update. As for nominee, because it's very sensitive, wherever you are, you will have to visit the SSNIT office because we need to confirm your identity. We need to make sure that you are not under any duress to make any nominee change. So apart from nominee, any other updates can be done through our systems, the digital platform I mentioned earlier.
Thanks, Lavina. I'd like to bring Mr. Polly back again. Ms. Polly, so the question is on regulatory changes. What would you say is the most important pension regulation that people should be aware of right now?
One, for employers, you must be careful because the law allows SSNIT and corporate trustees to charge you a penalty for not making your payment contribution within the stipulated time. At the end of every month, you have 14 days to pay your SSNIT contributions. And be mindful, this money is not yours. You deducted from the employee's salary and you added that to it. So that must be paid to SSNIT. Failure to do so, you'll be charged penalty. If it goes on, you can be arraigned before court and you'll be prosecuted. So that is one. Number two, this is really not law, but I'm encouraging every member, whether it's SSNIT or any scheme you join, always demand for your statement of account. Because the statement of account will tell you whether everything is right with what you are doing. So, and then let's take advantage of also the 35% time mentioned, so that we can have even four schemes at a go, which will eventually help you to have enhanced pension funds when you're going on retirement.
Thank you, Mr. Yes.
Tracy also said something, let me quickly add. You know, because he said something that's very instructive. Allowances are not part of the distance. So normally what we should try also negotiate with our employers is that instead of doing allowances, they should do it consolidated. When they do it consolidated, then our contributions will go up. And of course, like Tracy said, that when we are working out your pension, we also give you more money.
Right. Thank you. Thank you very much. We are now at the end of the session. I believe most of our questions, if not all, have been answered. PPT and SSNIT have put their contacts in the chat box and the relevant shortcodes in the chat box. This presentation would be made available to everyone. This call will be made available to everyone after, so we can still refer to it after the session. And I would also like to use the opportunity to welcome everyone, every company who is here to join the GNBCC network. We're a membership organization. We've existed for over 20 years. And for our members, we offer various benefits. We would bring you networking sessions, business breakfast sessions, but we bring you the platform to network with other companies that might be of interest or might be of relevance to your company. So you're able to build networks, and through our project, if there are projects that are relevant for your business and you're a GNBCC member, you're welcome to take advantage of them and elevate your business. So please, if you're a company here, you're welcome to join the GNBCC network, and you would also have the opportunity to interact with Mr. Polly more often, because he's currently the GNBCC board chairman and very, very instrumental with the chamber's activities. I would like to say a big thank you again to Mr. Polly and the PPT team, because even though Mr. Polly has done the talk, and I see that your colleagues are also very active in the chat box, and also to SSNIT, thank you for honoring this invitation on short notice and being ready and being very, very helpful with your sharing. So also to our audience, thank you for being here with us and sitting for 1 hour, 30 minutes. I hope this has been very insightful. And don't hesitate to reach out to GNBCC, to SSNIT, or to PPT if you have any questions or any other concerns or comments. All right, so this is where we draw the curtain. I wish you a good rest of your day, and thank you, everyone. Bye-bye.